Hey traders, this is Ron Haight. Happy Sunday. Hope you guys are having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. I'm going to kick off here with weekly charts on the major indexes. So the diamonds, the DIA is the Dow ETF. Each candle represents a single week. This is where we were to start 2018 a year ago. Basically, it was one big consolidation. We did set new all-time highs in September, and then the sell-off has begun. Now, on a weekly basis, the sell-off actually doesn't look that bad, does it? If I compare this to a daily chart, it looks like from here, zoom, we're down here. But keeping things in the context of a longer-term time frame, there actually hasn't been a whole lot of damage done just yet. That could all change yet. So the week of 12/17, we finished lower. Then the week of basically Christmas, we had a rally day after Christmas, and that brought us back up into the old support range on the weekly charts. And then here was this past week, the week of New Year's. We are still below the blue line. Now, because this is a weekly chart, the blue line is the 5-period moving average. The point is, when you get above shorter-term moving averages, you switch short-term bullish. When you get above longer-term moving averages, like the 20-day in red or the 50-day in orange, that switches more longer term time frames bullish. You get the idea. We have not gotten above the 5-period on the weekly yet on the Dow. If we go to the S&P, the spiders, same thing. We have not gotten above the 5-period. And all we're doing here in the S&P is trying to get back up into the old support area. And if I bring this to our right, you'll see that's going to act as resistance. Now, if I go back to the Dow, we're actually a little bit above that. So the Dow, you could say, is outperforming a little bit versus the S&P. If I go to the Qs, NASDAQ 100, we're back up into that old, what was arguably support. Now it's going to become resistance. If I zoom in a little closer, the 5-period closed at 156.34. We're at 0.23. We're 20 cents away, but we're still below it. We can't even get above that, despite Friday's epic rally. You know, where the S&P ES futures were up over 80 points. Dow was up over 700 points. Let's go take a look at now the Russell 2000, the small caps. Weekly, right on the 5-period, essentially. We actually penetrated the 200-period 2 weeks ago, week before Christmas. That was not a good sign. Volume really picked up. It didn't, I don't think that was even close to capitulation yet. We were barely outside the 2 standard deviation John Bollinger Band lines, which are the green. We weren't like way outside, we were just a little outside. That's a little concerning. We had that kind of drop and couldn't even register extreme oversold. And here are your mid caps. They're not quite back at their 5-period. So all in all, on a weekly basis, everything's still bearish, even with that kind of massive rally on Friday, which followed a massive sell-off on Thursday. Let me just say this before we get into the daily charts. When there is a correction, volatility does spike. Volatility in the sense of the VIX, but volatility in terms of market moves. So seeing a massive sell-off Thursday, which looked like we were going back to retest the lows, and then an even bigger rally on Friday, it's not out of the ordinary, believe it or not. It's not like a big shock. It's sort of like, yeah, this is sort of what happens when we try to figure out if there's going to be a bottom or not. The downtrends are in place. So since we're on the mid caps, let me take this into a 1-year daily view. Now each candle represents, you got it, 1 day. Looks worse on the decline, but the rally looks a little better, doesn't it? We are stopped cold at the 20-day EMA in red. Okay, if we get above there, what's the target? The next major moving average, which is the 50-day, which is up around 323 right now. And then you could also draw in some support here and a ledge here before we fall. And if you don't mind, I think technical analysis is just so helpful. Nothing's perfect, but you know, just check this out. We come down, we bounce up. Previous swing high stops us. We sort of come down, we don't quite retest the lows. Go back up, previous highs stop us. We come down, December 7th and 6th, basically hit the previous lows. And when I say lows, I'm usually talking about closing prices. Same with highs. I always default to where did traders take their money home on the day, not the absolute intraday highs or the absolute intraday lows. But look at this. Testing support from October. We break it, December 10th, what do? We try to quick rally, doot, right back up, get stuck at the old support area, and then a waterfall just happens, jumping right off a cliff. And remember, I talk about from time to time fake hammers. Hammers in candlestick terminology can be incredibly powerful. There was a fake hammer on the 10th. That's why I call them rubber hammers. Don't trust them. They don't have the same impact as a true hammer candlestick pattern where there's lots of selling, a hammer comes in, capitulation is over, and then up we go. That's why you don't trust it. Maybe it's going to be a hammer in terms of accuracy and we will go higher, but trust but verify approach. There was no bounce, and then down we go. So with that being said, we're still below the 20-day EMA, target back up there around 323 as it stands now, which also coincides with those two previous lows. All right, let's speed up a little bit. Here's the IWM. Now, interestingly, it did get above its 20-day EMA. Not by a whole lot, but it did. Target, 50-day, which are the previous lows. Let's go to the Qs. It got above its 20-day EMA, but you can see this little horizontal gray area, that is the lows, the low area. It's not exactly perfect from back in February, back in April. We're there. What's the next target? 50-day at 162.50. So we could actually rally again another $6 here on Qs, and we're still going to be below the 50-day. So if we get a massive rally again tomorrow, we're still bearish going through the 50-day. So we're above the 5-day in blue. The 5-day outlook's bullish. We're above the red line, barely. The 20-day outlook is bullish, but we're still below the 50. We're still below the 200. If I go to the SPY, just working in reverse order here, SPY tagged its 20-day EMA on the daily chart, finished below. 5-day bullish, 20-day still bearish. If we get through here, this one's a little harder because you have the old support zone, and then you have the 50-day up here, which comes in here. So even if the SPY could, jump another 7-8 points or 70-80 S&P points, basically do what it did on Friday, whether that's over the course of a week or a day, it still has a lot of chopping to get through. And this should provide some slowing of the rally because anybody that tried to buy these dips now might say, man, this has been a crazy year, crazy end of last year, beginning of this year. Let me just get my money back. And you get this overhead supply, which results in more selling. Then the diamonds, doing the best of all the majors. It's already back above, barely, but it is. The previous support area in gray, but we tagged the 20-day in red, and we were rejected. If we can close above that red line, then you come up here, you go to these previous lows, and look, the 50-day is basically right there around 243. So 800-900 points yet upside on the Dow if we can get above the red line, the 20-day EMA, okay? So if I were to package it all up, caution is massively warranted here still. Bears have the edge, the headline edge. The very, very short term, we're back above 5 days and in some cases 20 days. But I would not personally say that this is bullish by any stretch. Looking at, into the rest of January, there's just not enough data that supports that view from a technical perspective, okay? So here is the VIX. Now, the VIX is crashing lower. That's going to be bullish for equities. We're still above 20. We're still at 21.38, but a bearish VIX usually is good for equities. Now let's go to TLT. If I go back 2 years, we'll stick to a daily chart. This was the old resistance area. We sort of got close to it. In fact, you could make an argument that we literally tagged the underside of it or pretty close to it. We had a 1-day drop on Friday. The trend here is still short-term up. If bonds break out above 125, I think that to me is going to put the odds in the basket of money is coming out of the stock market and it is finding a home in the bonds. Short term, it's done that. It's played some catch up, but we need to break out of this big zone. Otherwise, it's just wishy-washy. And then how about gold, which I do have a bullish position in. Here is GLD. And once we broke the 200-day back on December 20th, I did a webinar. And I talked to you guys about how it seasonally rallies. And it's gone from 119 up into the 122 area, and now it's sitting at 121.44. The target initially is a gap fill just over 123. Then you go back to previous peaks. Gold typically does well this kind of year. If you were unaware that gold does well, you missed in my opinion, a fantastic probability, opportunity probability, if you will. The last 5 years is exactly what gold has done. You need to be aware of these patterns because despite if the market is, soaring higher or if we're crashing lower, there's stocks that move lower this time of year, like the airlines. If you had known about seasonality, you would have known that, oh, the market's selling off. Yeah, but airlines get crushed. To use a bad pun, they crash. It's what they do. I mean, if you look at JetBlue, and I think I talked about this in another video, down she goes. You look at Delta. I love flying Delta, but if you're a stock owner, you got to be aware December and January. Usually December at some point marks a high. This year it was literally beginning of December. Some years it's the middle of December. It's December is the yellow flag area, and then January is typically not good. These things are dropping again. So here's what I'm going to do. I need you guys at this event. Even if you've seen it before, I'm going to do a little bit of a twist. This Wednesday, which is just 3 days from now, I'm going to hold an event. It's free, noon Eastern, 9 a.m. Pacific. There's going to be a link at the bottom of the YouTube video. You just have to click more info on the video or in an email that you've been sent this video. Or if you found it at markettamer.com or at financial.com. I'm inviting both groups in. There is a 500 seat limit. If you want to know, regardless if the market's ripping, crashing, trading range, I can show you stocks that have historical track records of winning not just 50, 60% of the time, 75%, 85%, 90% of the time. Some of these publicly traded companies have been publicly traded for 20, 30, 40 plus years. And during certain times of the year, the big money flows in and the big money flows out. So if you had that treasure map before the stocks entered those windows, you can imagine the value of that information. I can't stress it enough. I'm going to make it free. I'll show you exactly who they are to kick off the new year, what I like to say, with a bang. So instead of wondering, I wonder what the market's going to do come, Monday, are we going to go up or down again? I can actually show you the stocks that this is what they do historically. And if you had this information at your fingertips, you would have known that, man, we better be watching gold. Man, we should have been watching and preparing for Netflix, which we'll get to here in a second. We should have been aware the airlines don't do well. And it goes on and on. And I'll show you how to spot them. Because just because a stock does this 9 out of 10 years or 10 out of 10 years, for example, historically, there's no guarantee it's going to do it this year, right? But I'll show you how to try to get ahead of that. I will show you how to spot when the elephant makes that step in the grass and say, oh boy, here they come again. So please get at this event. I would expect we're going to hit max capacity. When I did this event last month, we did it 3 straight times. So get there this Wednesday. Go ahead and register. Now, I talked about Netflix, right? Netflix has an earnings report coming up, according to profit charts, January 17th. So we're still about 10 days away, right? 11 days away. Look what it did, though, on Friday. Yeah, the market ripped up big, but so did Netflix, closed at literally the absolute highs of the day on the strongest buy volume that we have seen since late October, mid-October. The target technically now is the 200-day moving average, which is up there around 330 something. Will it get there between now and before the earnings report? Anything's possible. There's no way to know. But typically it does well heading into the report, and then it does well after the report. So I'll show you guys some trading ideas on Netflix as well. Again, always from a paper trading perspective in Wednesday's event. We'll specifically be using Netflix, and we'll specifically be using GLD, which, like I said earlier, I have a bullish position in. And I say this when I have positions just for transparency purposes. Now, CES, which is the Consumer Electronics Show, is being held in Vegas this week, Tuesday through Friday. And stocks like Apple may announce something, not saying they will. I have no idea what they're going to do. If we look at Apple, because it's probably the number one stock I get asked about the most, Apple had a big bad news event with suppliers and et cetera, and cutting forecasts and all that good stuff. Rebound on Friday. It is below all moving averages. This thing is the definition of bearish. And if I take you to a 2-year weekly chart, each candle is going to represent 1 week in the market. You're still below the 5 period, and the 200 period's down here. We've gotten close enough to tag it. We don't need absolutes where, oh my gosh, you must touch that line or you are not valid. We got close enough on the weekly, and then from the daily chart, the support zone that I was telling you guys, maybe around 140, if I zoom in again, hang on, with Thursday's close at Thursday's low was 142, $2, that's close enough for horseshoes. We basically hit there. Now we'll see if Apple can try to rally. So other stocks may announce, like NVDA, you might see product announcements. If my memory serves me correctly, sometimes they do, and the stock can react accordingly. We're putting in basically another bear flag here. Looks like a boot, but we're hanging around the previous lows. Maybe a positive news announcement gets this one rolling higher. For NVIDIA to turn bullish, we need to get above the red line, 20-day EMA, and then above the orange, then you go to gap fills and the next one. As of right now, NVIDIA is trying to base. This thing is still bearish. Another one that may have some announcements is AMD. And this goes back to seasonality. Let me just show you something. AMD rally. AMD tops in September, October area. This is the area it tops. Just think about this, and I believe I used this as an example previously. 3250 to 1750, that's gut-wrenching in about over the course of about a month and a half, but that's what AMD does. These are these repetitive patterns where the big money moves, or call it seasonality. And I can show you guys how to try to spot this and how to prepare for it, but if you owned AMD, you were not shocked by this. And frankly, if you want to talk about stocks that are holding up really well, while the spiders and the Dow and the Qs are getting crushed, AMD is net even to maybe even up a little bit from the end of October. Pretty amazing. But you would have known that this was the bad period. Could have had collar trades, protective puts, just gone bearish, and had the potential to make maybe a possible small fortune, knowing how these patterns play out. When I say patterns, not necessarily a chart pattern. I'm talking about big money buying and selling, which is why you need to be at that event. All right, here's something I just found on my own. I was just playing around looking for big movers. Here's ROKU. I'm seeing spikes in volume. This is a newly public company, but it finally closed above the red line. From a technical perspective, the upside target's about 20% higher at the 50-day, which coincides with this ledge support before we just went straight down for about 10 days. Then you have the 50, the 200, and then you just go to gaps, right? So if you're looking for something from a momentum perspective, ROKU here looks interesting. And then just to wrap it up, I just want to comment on the banks, because if this rally on the daily basis is going to have some legs, the banks closed firmly above their 20-day EMA target, the 50-day, which is just a little above the previous low. So there's a little bit more room here maybe for the banks to rally. They literally tagged the old support from back in 2017, where we had, I can't even count all those, probably about a dozen plus hits of that level, right around 22.25. We hit that exactly marked the low, and now we're bouncing. A little interesting that we didn't try to probe it better, but banks are looking up a little bit too right now. Let's actually look at a weekly basis. And on a weekly, yeah, they're still basically on, maybe just a teeny bit above their 5 period on the weekly. And then that coincides with $25 as the upside target, maybe another 75 cents. So we'll see how this week goes. Again, caution is absolutely warranted. The bears, I think, still have firm control of the overall market. Only the very short-term movements are starting to turn up a little bit. The longer-term stuff, all bearish, 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 okay? We also have earnings season kicking up in about 10 to 14 days. So heads up there too. We might see a little bit of maybe a relief rally into earnings since we had such a stark sell-off. And then we can see how the companies will react, or I should say how the big money is going to react to those earnings reports. I wish you guys all the very best, and I look forward to seeing you in tomorrow's video. Take good care.